The collapse of Silicon Valley Bank set off panic.
We have went to 2 other banks and have started withdrawing the funds.
The federal government is stepping in to ensure consumers have access to their money today. But Treasury Secretary Janet Yellen insists there would be no bank bailouts like there were in 2008.
The reforms that have been put in place means that we're not going to do that again.
Instead, regulators plan to back all SVB deposits and those at Signature Bank in New York, which shuttered Sunday. They'll cover those costs, in part, by using the FDIC's Deposit Insurance Fund.
It's not going to cost taxpayers money.
The extraordinary move also aims to calm financial markets before trading resumes this morning. Experts weighed in on what they believe is the root cause of the second largest bank failure in U.S. history.
Banks are free to fail when you have a change in interest rates like we've had over the past several months, the most aggressive rate hike cycle in 2 generations. Some banks' business models are not going to work anymore.
The White House hopes to ease fears that more banks could follow. In Washington, Bree Jackson, NBC News. And this morning, President Biden will deliver remarks about maintaining a resilient banking system. In Washington, Bree Jackson, NBC News.
President Joe Biden trying to instill confidence in the American banking system after Silicon Valley Bank collapsed and Signature Bank was shut down by regulators, both within days of each other.
Americans can have confidence that the banking system is safe.
Biden said customers of the failed banks would have access to their money Monday. The funds coming from the Federal Deposit Insurance Fund, which banks pay into, and not from taxpayers. Biden also said investors took a knowing risk in the failed banks and would not be protected, and the bank's leaders fired. Silicon Valley Bank was little known to most Americans outside of the startup world before depositors hastily withdrew $42 billion last Thursday in a classic bank run amid anxiety about SVB's financial health. The Biden administration's plan was relief to customers like Stefan Kalb.
It's odd to think about it now, but just even a week ago, Silicon Valley Bank was the gold standard. We are expecting Silicon Valley Bank to be around.
On Sunday, New York state regulators seized Signature Bank, a big lender to the cryptocurrency industry. Fears of other regional banks on the brink are raising eyebrows about how they're regulated, with less stringent rules than those put in place for the major financial institutions after the 2008 financial crisis.
The problem is, because of those regulations, a lot of the business they were doing has migrated to the less regulated parts of the financial sector, which are now pretty big.
Meanwhile, the Securities and Exchange Commission said Monday it's on high alert for any misconduct amid the recent banking turmoil. In Washington, I'm Karen Kafa.
The Biden administration took extraordinary steps Sunday to ensure that all depositors working with Silicon Valley Bank would be made whole, guaranteeing they would have access to their money starting on Monday. The announcement came in a joint statement between the Treasury Department, FDIC, and Federal Reserve, where they also revealed the closure of a second bank, Signature Bank, which is based in New York. Officials said that the same protections being offered to depositors with Silicon Valley Bank would also be extended to that bank as well. It came at a time where there were many questions for depositors about whether they would have access to their money. The FDIC only previously insured up to $250,000 being held at the bank, and the majority of customers had more money than that in their accounts. Ultimately, this move will ensure that all depositors will be able to access their money at a time when there were questions about how people would run their businesses and also how they would meet payroll heading into this week. Now, federal officials worked around the clock over the weekend trying to find some resolution to the sudden collapse of Silicon Valley Bank. One avenue that was also being pursued was trying to find a private buyer to purchase the assets of Silicon Valley Bank. Treasury officials said that they were evaluating those bids, but ultimately decided to move quickly as they were watching this situation quickly unfold, and they wanted to offer some assurances to those customers who had been working with Silicon Valley Bank. Now, Treasury Secretary Janet Yellen said earlier on Sunday that there would there would not be a wide-scale, large bailout of the bank, similar to what was seen during the 2008 financial crisis. Treasury officials pushed back on the idea that this was a bailout, saying that the burden will not be borne by the taxpayers, and also noting that shareholders and senior management would not be protected by these new rules. Now, ultimately, the White House and the Biden administration has tried to stress that they believe that the banking system in this country is resilient, in part due to those reforms put in place after the 2008 financial crisis. President Biden told reporters as he was traveling back from Delaware on Sunday that he would talk about this issue on Monday morning, as his White House is trying to ensure that there are not more stresses put on the U.S. banking system and the U.S. economy writ large. Arlette Saenz, CNN, the White House.
Leave a comment and share this video with your friends. With daily uploads, there will always be a conversation.